This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
जी हाँ, आप अपनी स्क्रीन पे देख सकते हैं कि हम लैंडर मॉड्यूल
Well, I think scenes of jubilation, and why not? It's a very proud moment for India. It's a proud moment for the scientists at ISRO. It's a proud moment for citizens like you and me. I think that super conveys it very well. India's moonshot now a reality. So absolutely fantastic news coming out yesterday evening. And I think that's going to be something we will celebrate all day today. Morning, guys.
Hi, good morning. What a moment,
what a proud
right?
Moment.
What a proud moment. Of course, India is now the fourth country to land on the moon. So that, you enter that elite club. But I have to tell you guys about my experience. I was on flight back from Bangalore yesterday, and when the Chandrayaan 3 landed on the moon. And when the pilot announced it, everyone just erupted in, in applause and cheer on flight. It was a great moment, really, to celebrate. I'm sure all of you watched it with your families as well. But spectacular, right?
Absolutely, and the first on the South Pole, right?
Yes.
So fourth overall and first on the South Pole.
That's where the water is, Nigel. I'm not kidding. The ice in the water is... I'll tell you, I was at this CNBC TV18, the mega banking conclave yesterday, and there was a panel discussion going on, and I think there was the floor was open to questions, and a gentleman picked up the mic, and we all thought, well, he's going to ask a question. He said, well, I don't have any question, but I want to just announce that Chandrayaan is landing on the moon. So, I mean, the entire room erupted. And actually, that's the thing, right? I mean, it's the experience of experiencing something like this with other people, which adds to it.
I don't think you understand the enormity of the situation until maybe a few years later, when you can actually go back and think, that was the day when Chandrayaan 3 landed, and I was there to witness it.
And across ages, people were celebrating. Whether you look at your parents or you look at your children as well, they came home from school saying, today it's something special on the moon. So it was such a special moment. You just got home and everyone is excited about it. So,
it's a happy occasion.
And proud.
Proud, absolutely. Well,
this was unmanned, but hopefully someday maybe you'll take a trip to the moon.
Yeah, I mean, I think there's a mission called Artemis 3, which NASA is, I mean, they're planning to send people back to the moon, and that's scheduled for 2025. So our own, I don't know, but it's a start.
Not too far away.
Not too far away. All right, well, let's just quickly kickstart the session with what you need to know in terms of the action, right? Markets. And markets, by the way, are also looking good, I dare say, after many sessions of kind of sideways and lackluster moves. So it'll come up on your screen. The Nifty yesterday ended higher. And the question is it time to now pick up the pace? Is it time for the market to break out of this kind of consolidatory zone? And is it time for the market to pick up pace on the upside? That's the question. And why am I saying that? I'll get to technicals and levels in just a bit, but overnight we have a solid rally. So you have the S&P 500, which was up 1.1%. The NASDAQ was up about 1.6%. So this is, I mean, way better than the kind of closes we've been having in the US session for the last many. The Treasury market gave a very big move. The 10-year yield lost 14 basis points in a single session, right? I mean, we had hit 4.35. We are now back to just under 4.2. And the reason is that you had weak US data, which basically triggered a dovish response. I'm talking about US manufacturing PMI, services PMI maybe lesser so, the BLS employment survey revision, which was lower, there were some housing numbers which came through. The point is data was soft, and that's the number, right? The US manufacturing PMI fell, and it was a surprise to 47 from 49. So that's a big drop, and that's the reason why you had a bit of a repricing in the rates market as well. Now, it kind of, again, brings into sharp focus that, well, is the US economy headed to a very orderly, soft landing kind of a situation? The only risk to this is if tomorrow, that is after market hours, our time, I mean, US market time, the Fed Chair Jerome Powell sounds hawkish. That's the only risk now, which could turn all of this around. Otherwise, it's a pretty decent place to be in at this point. The other big cue is that the leader, the Pied Piper for this entire big tech move, all of 2023, this AI-led move, which is NVIDIA, that closed higher after another blowout quarter. Remember, the last quarter was an absolute beat. Stock rallied 40% after that. But, last night as well, NVIDIA numbers have beaten and other AI stocks are following. Actually, if you look at the NASDAQ futures, there's a specific index for AI stocks. Those are rallying, and those are made up of large cap influence on US indices overall. So that's that. Dollar index naturally came off a little bit. We're at about 103.35. Oil prices are well behaved. We are at about 82.87, which means that oil prices fell 1.5%. And that gets us to asking the question whether here also in India we will see a bit of an up move. And I think, yes, maybe that is what we will get. So the Nifty yesterday ended marginally above the upper end of the falling channel. We put out that level, which was 19,440. We left off at 19,444, just marginally above that. Today, on the way up, there are levels to watch. The first one is the 20-day moving average, which is about 100 points away. 19,529 is that level. That's the all-important resistance. Above that, the 61.8% retracement of the fall stands at 19,700. I don't think we get to that maybe in a day or two if things do pick up. But just 100 points away, there is a 20-day moving average, which is the marker between being in an uptrend and a downtrend. Recent low is 19,523. 19,253, which was the low last week, which should not be broken. Now, Bank Nifty decisively closed above 44,151, the level that we put out yesterday. Actually, banks is what excited many because after many days, the Nifty Bank had a full 1% move on the upside. That's been the laggard, and hopefully that will pick up as well. In the near term, there are two levels. The 40-day exponential moving average is 44,588. The 20-day comes in at 44,725. Those are the two immediate near-term resistances. And the major resistance from, in terms of the fall from the highs to the recent low is that number, which is 45,312. You'll be lucky if you get a soft kind of start, which gives you a perfect entry point, and then you can, sort of participate on the upside. That's going to be unlikely. The implied open will come up on your screen. I think it's already indicating a higher start. So maybe wait for perhaps, slight, the market to come off a little bit, slight small dips, etc. And I think that's the way to go. I've put out levels already, which perhaps come into play a little higher from what the implied open is at. Sonia.
Oh, absolutely. I mean, a big opening lined up, right? After a while. A big opening in the green. But I take your point. The real headline globally is what's happening with NVIDIA, right? Yeah. Blowout numbers this time. We'll talk about it in greater detail. But it's what? $10 billion of revenues this time, which is a 170% increase year on year because of the amount of the demand for AI chips. Yeah. And that just shows you that AI is not the future, it's actually the present. But we'll talk about that in greater detail. Before that, on the market itself, I think an uptrend has resumed. Perhaps it may be too soon to tell whether it will be intact or not. But definitely, the last couple of days, if you look at the market, map it from the August 18th low of 19,267, the Nifty is now up almost 200 odd points. So it has sort of picked up pace in the last 10 days or so. But now we are at the upper end of the trading range. It's important to see if this 19,500 level gets broken on the upside. But there are some cues to suggest that the flows have picked up. Both FIs and DIs bought in the cash markets yesterday. FIs bought 600 crores, DIs bought 120 crores. And global cues have also been very strong. As we just said, the NASDAQ is up for the third day in a row. It's not just NVIDIA, but it's taken the entire sector up with it. In fact, NASDAQ was up 200 points overnight. The Dow was up almost 200 points as well. Now, NVIDIA not only reported a blowout set of numbers this quarter, but the company expects their Q3 sales to triple, led by that insatiable AI demand. So that's pretty much the focus area for the markets. In our own markets, of course, a lot of stocks like Coforge, etc. will be in focus, as Bearings P is likely to sell its entire stake, but more on that later. But for now, I think the start will be well in the green. So the bulls are back.
Well, the bulls will be feeling good after yesterday's session, Sonia. But just one word on the institutional participation. The FI participation the last 3 days has been relatively lower than what we have seen in the previous week. So that's come down a little bit just for the last 3 days or so. The Chandrayaan 3, well, it's been lucky for the bulls. And I say this because on the date of launch, well, we ended virtually at the high point of the day. We had a rather good session. And yesterday on the date of, accomplishing the mission as well, we were higher. So that's been a lucky point. Moving to the FI data, then yesterday, there was some mild short covering and they added long positions. But just take a look at the swing factor there. Shorts go down by 3,000 contracts, longs go down by 6,400 contracts. So that's a swing factor of close to around 10,000 contracts on. And that's why now you're seeing the short positions from around 61%. It's come down to around 55%. So some part of that short covering has taken place. And I always make this point that I like a net short market because that's what it does. It forces the bears to cover out some short positions and take it a little bit higher. The biggest positive, though, from yesterday's perspective, is the FIs, the way they were writing puts. And they were writing both Nifty as well as Nifty Bank puts. Let's get to that then. On the Nifty, the 19,400 put, well, that was fairly active. It added close to around 70 lakh share dollar, premium around 30 rupees. So you just plug in that number. Since the 19,400 put is getting written, you deduct 30 rupees from there, and you'll get a bit of a support zone at around 19,370 for the day. The crucial support comes in at around 19,350, which is the 50 DMA. On the upside, though, once we cross the 20 DMA, then you'll say that we're in for a fresh breakout. Till then, you'll say, well, we're pretty much in this range. The Nifty Bank, we made this point 2 sessions ago that it's looking like it wants to make a big move. The move was on the upside. It was up close to around 500 points approximately, and there were signs of writing. So the 44,300 put, that was written yesterday. The premium ended at around 70 rupees. At the start of the session, it was close to around 300 rupees. So on an average, you're assuming that it could be 100, 150 rupees or thereabouts. The support is at around 44,200. Why is that? Because, in fact, on the way up, that was a bit of a resistance level. So that's going to be important. And today, we'll be starting off, in all likelihood, closer to around the crucial resistance zone of around 44,700, 44,800. And that's precisely where you have the 20 and the 50 DMA on the Nifty Bank. So how do you approach trade then, given that we're going to likely see a gap up? Well, if you have long positions, I think book some at the start. Maybe you could book half of those positions and carry the remaining. That could be a possible trade with a trailing stop loss out there, because the gap up is going to be bang in the resistance zone close to around the 20 DMA. So let's see how this one goes.
Okay, let's see how it goes. But we've been talking about the equities for a bit, equity markets. Let's get you some views on the money markets as well. We have a comment coming in from Parul Mithal Sinha of Standard Chartered, who says that the dollar INR slipped back below the key 83 to the dollar threshold as dollar stayed range bound despite the up move in the US rates, and with the USD CNH momentum ebbing on sharply lower fixings by the PBOC next week. She expects the dollar INR to trade in a range of 82.80 to 83.25. She says RBI intervention will help contain the volatility.
Okay, on bonds, we've got Parul saying that domestic yields consolidated last week after the recent up move tracking global rates, even as liquidity deficit put pressure on short-term rates. She expects the 10-year benchmark bond yield to trade between 7.15 to 7.25%, with Jackson Hole on watch given its impact on global rates. She says oil prices and domestic food prices would stay key market drivers.
Well, we have a lot of stock-specific action to track for you. Get to that in just a bit. But for the time being, let's run you through the list. We're looking at Reliance Industries, Chandrayaan Pharma, Atul Autos, Snowman Logistics, and Vascon Engineers. They are all the stocks that we're looking at on the back of positive news flow. And it's split down the middle because you have 5 stocks that could be reacting to negative news flow. They include Coforge, Sun Pharma, P&G Health, ONGC, as well as Oil India.
All right. Well, Rana Gupta is Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. He's joining us now to take some questions. Rana, good to have you with us here. Thank you very much. Just want to start with a little bit of, what foreigners are doing in India. So we had the EPFR. They collect data from across funds. And they've been telling us, till before yesterday, that India dedicated funds have been receiving a lot of money, even as global emerging market funds have been tepid. Yesterday, when we spoke with them, they said, well, things have slowed down. India-specific funds still positive, GEM funds now negative. Is, the tap kind of not turning off, but is it slowing down in terms of flows? Just wanted to understand what the view is.
So I think the flow towards emerging markets are on a strong footing. And I think what you rightly pointed out within emerging markets, if we talk about global emerging markets, China is a big portion. So therefore, there are some investors who are taking a view that China will be growing a lot slower than the other emerging markets. And therefore, I look at money to the emerging markets, directly. India is one example. So we do think these flows are on a pretty strong footing. There will be, ups and downs in terms of momentum swing up and down. But overall, I think emerging markets, particularly the ones which has pretty strong growth rates, a good fiscal and good current account, will see, I think, good inflows over next few years.
The inflows, Rana, have been pretty strong in the Indian markets up until now. Within the emerging market basket, does India continue to remain your preferred pick, or are you a bit cautious now given the run-up that we've seen?
So I think the markets might consolidate between this 18,000, 19,000, 20,000 range or thereabouts. But I think overall longer term optimism remains. That's point number one. But point number two is that I think beyond the headline Nifty level, which comprises of so many, external and internal sectors, I think the real story is the domestic Indian market. I think if you look at some of the themes that we've been highlighting, whether it's digital, whether it is manufacturing or transition to clean energy, premiumization of consumption, overall deficit reduction, therefore inflows into banks, insurance, real estate, those themes I think will continue to attract quite a bit of attention going forward.
Hi Rana, good morning. What are you expecting from Fed Chair? He speaks tomorrow. And what are you factoring in terms of rate hikes? Everyone thought we were done with the last rate hike. Now, some part believes that maybe we have one more in the offing. And more importantly, that rate cut that people were talking about, now that looks like it's pushed back further into 2024. What's your estimates?
I think we are at, in US states, we're talking about we are 5.5. It can go up by 25 basis points, may or may not. We don't. I'm not even making a comment on that. But I think given the inflation trajectory, it looks unlikely. The base case will be a pause, but we will see about that. What the Fed is going to say in Jackson Hole, I think is anyone's guess. But I guess his commentary has been on the lines of that inflation is perhaps moderating. We have to be cautious, wait and see, not jump the gun. You're right, and we also think that the rate cut is pushed out because of the inflation still remaining higher than the Fed target. But we do spend a lot of time on the monetary policy, but I think I want to highlight one point, if I may. I think the rates have been high for some time, and the markets keep on rallying. This has confounded many. But the point is, the changes that we have seen in US fiscal and industrial policy is something I think we should spend some more time about. Because the US incentives that is given in whether it's chip manufacturing or electric vehicle manufacturing within the US borders, I think are pretty significant. And that is what keeping the industrial part of the market alive. So, coming to India, like for example, India also, there are PLIs, right? We are seeing similar kind of policies across many markets where the government is giving subsidies to build up the industrial chain. So I think that is one of the more paradigm shift that is taking place. Monetary policy is important, but I think some of these points also need to be considered.
Okay, so then you want to wind down by telling us what is the, what is your pecking order looking like now between emerging and developed markets for the rest of the year? And in general, what is your advice to investors? Given the kind of run-up that we've seen, does it make sense to take a little bit of, book a little bit of cash or continue to invest specifically in markets like India?
So I won't be able to comment on developed market because that's frankly not my true forte. But what I can share is that, I just mentioned in the answer to the last question that monetary policy is becoming, the rates are becoming higher. So if you're in emerging markets and then your market in a macro has a lot of external debt in US dollar, or your company has a lot of US dollar debt, then that's something to be concerned about. On the other hand, if your country sector or the stocks or the companies are linked to the positive coming out of US fiscal policy, for example, the US needs to source more, and they will not. They will reduce dependence on China. So where do they go? If your country, the market, or the stocks are exposed to those themes, I think those markets can do very well. On the top of it, if within the country there are reforms that have happened which makes productivity go higher, I think that's just the cherry on the top. So I think those markets and India falls into that bracket. I think the longer term outlook remains very bullish. But again, themes one have to select. And like I mentioned, I will reiterate one more time. I think within India, we like digital, we like manufacturing, we like clean tech, we like premiumization of consumption. We also like the deficit reduction theme, which is, so therefore the overall savings increasing in the country.
No, those are good points, Rana. Absolutely. I mean, actually, we don't talk very much about it. Even stuff like, manufacture, make in India or electronics manufacturing in India, right? The PLI schemes, etc. We look for stocks which will benefit because of that, but there is an interest rate aspect to it, right? Because electronics, for example, is the second largest import component for India, and if you're able to kind of make a lot of that here, that's a direct impact on current account deficit. That has got implications for interest rates, lowering interest rates generally over a period of time, and that's quite helpful in the environment that you're describing, which is generally high rates in the developed world, to be able to compete for flows. Yeah, lots to talk about. We'll pick up on some of this, next time we are on. Thanks very much, Rana. Appreciate you joining in here on CNBC TV18. Thank you. Well, we'll take a quick commercial break here. Our list of top stocks to watch out for will be coming up on the other side with our research team. Stay right here.
Welcome back to Bazaar Morning Call. Well, looks like it's going to be a good start, a decent start in the green. And we've had a couple of good days as well. The market has pulled back a bit. So let's see whether that extends itself into today. But our research team is here to give you the list of top 10 stocks. The big news maker could be Reliance Retail. Reliance has announced that QIA has invested over 8,000 crores in its retail arm at a $100 billion valuation. Nisha is here to give us more details on that. Nisha, big one.
That's right. It's a big announcement coming in from the large conglomerate Reliance Industries that its retail arm, Reliance Retail Ventures, is raising 8,278 crore rupees from Qatar Investment Authority. Now, this particular deal values the company Reliance Retail at $100 billion. This also doubles the valuation of the company in the last 3 years. You'll remember that 47,000 crore rupees for 10.5% stake was sold in Reliance Retail in 2020 in the middle of COVID, and that had valued the company close to about $50 billion. So doubling of valuation as the company also grows at a scorching pace. Now, what it does is that while there were expectations of $100 billion kind of a valuation, QIA, a large global investor coming in and investing 8,200 at that valuation, sets a benchmark valuation for the company, and it has picked up 0.99% stake. It also raises the expectations of the shareholders for a timeline for Reliance Retail's IPO in the upcoming AGM on August 28. So all eyes would be on the AGM. The investors who invested 3 years back also would be looking also at a value unlocking. So all eyes on the AGM.
Okay, thanks a lot for that, Anisha. Well, we'll have Abhijit Bora of Sharekhan as well as Devanshu Datta of Third Eyesight will be with us shortly to discuss this in more detail. So that's about Reliance and Reliance Retail. We'll have a quick analysis on that in just a bit from now. But let's hop across to Rima for the big, large trade that's going to take place on Coforge. Rima, tell us more.
Thanks so much for that. So Bearings, which is the promoter of Coforge, is likely to sell its entire stake in Coforge via block deals. We're talking about a massive 26.5% stake. This is what Abhishek has picked up from his market sources. IFL is the sole broker. And the last time when Bearings had sold close to about a 10% stake earlier this year, the stock had fallen 10%. So there will be some pressure because it's a very, very large stake sale that we're talking about. But the good part is once this is all done, is that the technical overhang of promoter's stake sale will come to an end. Now, the promoters had close to about a 70% stake in the company. This was about 4 years back. But they've been periodically selling their stake in the company. So there was always that stake sale overhang, which in a way now gets eliminated. And also, if you see that, when the promoters had that 70% stake, the stock price of Coforge was about 2,300. So since then, the stock has practically doubled despite multiple stake sales by the promoters. Secondly, there are quite a few marquee public shareholders, whether it's mutual funds like Motilal Oswal, UTI, AMC. They have an FPI holding of nearly 25% stake. And thirdly, the company's growth rate has been very, very strong. Just last year, they hit a $1 billion annual revenue run rate. And even the guidance for this year is of a double-digit 13 to 16% top-line growth. Back to you.
All right. Well, Rima, thanks very much for that. That's going to be interesting to watch this morning. Well, Ekta is now joining in on Torrent Pharma, the Sun Pharma, P&G Health, which are going to be in focus. Ekta, tell us more. Morning.
Morning. Well, I'll start with Sun Pharma, which is going to be in focus on account of them losing a Court of Appeals ruling on a litigation with regards to an alopecia drug which is under development. Now, basically, the court has given a win to Incyte, which is the pharma company that litigated against Sun Pharma on this alopecia drug, which challenged the patent in 2017. Now, HSBC has written on it. They have a buy rating and a target price of 1275 rupees on the stock. They believe that the ruling raises the risk of a payout to Incyte, the company that challenged the patent, and a delay in launch of this particular alopecia drug. The ruling, however, is unlikely to impact the plan to advance the drug for the FDA review. Remember that it is a drug under development at this point in time. So we can expect Sun Pharma to probably see some red on account of this. Torrent Pharma, the US FDA has classified their Dahej plant as voluntary action indicated, which basically means giving it a green signal. Remember that this particular plant was categorized as official action indicated, which means that there could be a regulatory risk and approvals could slow down from that particular facility. It was classified as OAI in July 2019, and now it was re-inspected in May of 2023, issued 2 observations, and now the US FDA has classified it as VAI, giving it a green signal. So that stock, I expect it to be in the green. P&G Health, expect the stock to probably be in the red because the revenue was up around 2%, EBITDA was down 23%, margins 15%, profit down 27%.
All right, thanks a lot, Ekta, for that. Well, let's hop across to Vivek now. He's tracking a couple of block deals this morning. Vivek, good morning.
Well, good morning. Some block deals and some news flow as well. First on our list, Atul Auto. Yesterday a very interesting block deal. Society General picked up almost 0.7% stake in the company, and this was done at 409 rupees per share. The other one on our radar, interesting here as well, Snowman Logistics. So the promoter group entity Gateway District Parks purchased another 11 lakh shares, another 0.7% stake in the company. Remember, at the end of the June quarter, they already held close to 41.75% stake. And last on my list is Vascon Engineering. Good large order win coming in for this particular name. Company got a letter of acceptance worth almost 605 crore, and this is from Bihar Medical Services and Infrastructure Corporation. Now, this particular project that the company will do is for the construction of Lohia Medical College, and the work has been awarded on an EPC basis. The company expects to complete this within the next 36 months.
Okay, all right. Thanks a lot for that, Vivek. Well, crude oil prices came off a little bit overnight, which is good news from an India market perspective. Manisha joins us to run us through all those details. Morning, Manisha.
Thank you for that, Nigel. Well, yes, third day of decline and 3-week lows is how the crude oil prices are trading now, and we seem to be moving away from that $80 a barrel. 78 is back in case of WTI there, and this is as the markets believe that the U.S. could continue with its restrictive policy. There is slowdown in China, as we have seen, and then the weak PMI data that came in from U.S. and Eurozone also seems to be weighing on. So the crude oil markets are headed for a second weekly decline, and we are down by 2% on this week already. The street would also watch out for the U.S. Drafting of sanctions on Venezuela oil sector. That could also lead to more supplies coming into the market.
All right, thanks a lot for that. Here is a quick recap of our top stocks with positive news flow: Reliance Industries, Torrent Pharma, Atul Auto, Snowman Logistics and Vascon Engineers. While stocks with negative news flow: Coforge, Sun Pharma, PNG Health, ONGC and Oil India. We'll take a quick break. On the other side of the break, Dipan Mehta of Elixir Equities will join in for some fundamental stock analysis. We'll also connect with Abhijit Bora of Sher Khan and Devanshu Datta of Third Eyesight to talk about the stake sale that took place in Reliance Retail, valuing the business at $100 billion. More on that coming up in a bit.
Welcome back. Hope you're having a good morning. Well, it's going to be a good morning for the bulls, at least to kickstart trade, because the GIFT Nifty is suggesting that we open up in the green. A couple of positives played out overnight. The US markets headed in the green. Crude oil prices cooled off a little bit, and the US Treasury yields as well cooled off. So put all that together, well, you'll be feeling quite good if you're a bull. But plenty of stocks to discuss, and we just ran you through our top 10 stocks. So Deepan Mehta, Director at Elixir Equities, joins us to help us out analyze some of this piece of news. Hi, Deepan. Good morning. Deepan, let's start off by talking about the large trade that we're expecting, as market opens. On Coforge, Baring's PE, they had 70% stake close to 3 years ago. They've been gradually selling their stake. And we understand from sources that 26% that's left goes out of the way. How do you approach the stock from here on in the backdrop that the management had told us they're going to grow by mid-teens irrespective, 13 to 16% odd? And also because of the promoter selling, there could be some passive flows that come in as well. Your take.
Yeah, Nigel, good morning, and thank you for having me on your show. I think it will have a temporary negative effect on the stock price because these deals are usually done at a slight discount. But the fact that Baring is able to exit by selling a 26% stake, and I'm sure the investors who are buying this stake are all marquee investors, just shows the depth of the Indian market. And typically, when large private equity players like Baring get an exit or able to encash their investments, it just means that they will bring more cash later on into the country, maybe through some other investment. Specifically, as far as Coforge is concerned, I think it's business as usual. The company has the best-in-class growth rates, and the exposure to the travel industry is doing pretty well for them. And this is the age of super specialization, and the customers or the market at large have understood the value of mid-cap companies and what they bring to the table in terms of domain expertise. So I think that when it comes to software, you have to be in the mid-cap stocks like, say, Coforge or KPIT or Persistent Systems, Tata Elxsi. These are all specialists, and I think that they have an edge over large-cap IT companies for very smaller projects where they have a domain expertise.
Okay, we have to discuss Reliance Industries, right, Deepan? So I want your thoughts on that. And I also have two gentlemen joining me, Abhijit Bora, the Senior Research Analyst of Sharekhan, and Devanshu Datta, founder and CEO of Third Eyesight. So the news, in case you missed it, is that Reliance announced that QIA has invested over 8,000 crores to buy 0.99% stake in the retail arm of Reliance Retail at $100 billion valuation. So, that's big news coming through. So, Deepan, before I go to the others, I wanted your thoughts on this. Now, there's the AGM that's coming up on the 28th, on Monday. And of course, I remember 5 years ago, the management had said that in 5 years, they will list both, Jio as well as the retail business. And now 4 years are up. So all eyes will be on whether they give us any timelines on the listing of these businesses. But purely on Reliance Retail and the announcement that has come through, what is your view?
Good morning, Sonia. The first thought which came to my mind is I wish I could buy Reliance Retail as well, but I cannot. I have to buy through Reliance Industries. And when I buy through Reliance Industries, I'm getting telecom also, I'm getting oil to chemical, I'm getting new age businesses, energy businesses. And it's a conglomerate of many segments and many sectors. And it's about time, as you said, that some amount of restructuring is done and these companies are listed separately. I only hope that it is a split the way that it with Jio Financial. Otherwise, if it's just a pure IPO, then Reliance Industries become a holding company. And we do not give a very low discount. I think we give a very high discount to holding companies. So that would be a disappointing from a shareholder's perspective. But if it is split, then certainly I think it will add a lot of value to minority shareholders. So let's see what steps the management take. But on the whole, I think it's a great development for Reliance Industries. And I think it gives them a lot of capital to grow the business as well. And it's a value discovery process.
Okay, Deepan, just one more quick question. Two. One is yesterday, all the Adani Group stock. Okay, I think what we'll do is just two questions. One is Adani Group stocks, which all sold off yesterday in the last 60 minutes or so of trade. So any thoughts, anything you picked up there? I mean, actually pretty large selling. And the other one is Paytm, Deepan, which spiked some 7-8%. In trade towards the end. I think Bernstein has got a note out this morning on Paytm positive view. Go on, Deepan.
Well, about Adani Group and why stock prices go up or down, very difficult to predict. A lot of news flow does happen over there, and there's hectic trading activity in these stocks, so it's difficult to analyze why stock prices go up or down for that matter. But Paytm, I think, is getting more and more support from the analyst community, and clearly we can now able to understand what their business strategy is, and the road to profitability also is becoming more and more, I would say, set and clear in the minds of the investors. And month after month, quarter after quarter, they are delivering exceptional numbers in terms of users, in terms of transactions, in terms of the new loans which they have, kind of got for their banking partners. So I think it's following its set path, and sooner or later it will become profitable and will be one of the unique fintech companies which offer a gamut of services and is yet profitable. So I think a lot of investors like the business model. And maybe from these levels also, you can expect the stock price to move up higher.
Okay, all right. Deepan, just to weigh in on the Paytm point, the Nuvoma alternate research report came out yesterday, and they're saying that in the MSCI changes for November, which the cutoff will be October, they see some bit of probability, not a very high probability, but Paytm could possibly be included. So that could be one of the other reasons. The note was released last morning, so maybe in fact, that could be one of the reasons as well.
Okay, big moves on Paytm, right? 900 rupees now on the stock. But let's get back to the discussion on Reliance and that big investment that's coming from QIA in Reliance Retail. Abhijit Bora, Senior Research Analyst of Sharekhan, joins in. Devanshu Datta, Founder and CEO of Third Eyesight, is also with us. Gentlemen, morning to both of you. Abhijit, let me start with you. Your thoughts on this investment that has come through, and what do you see as the potential valuation, the potential growth for Reliance Retail? I mean, it's been firing on all cylinders up until now, but what is the way forward?
See, firstly, if you see the valuation wise, they're at a 1% stake, they valued it at around $100 billion. When we compare it with the street valuation of $85 to $90 billion for Reliance Retail, it is approximately 10% higher than what the street is doing, and even higher than what we are building in terms of the retail Reliance Retail valuation. So we think that this will be positively viewed by the street, given the strategic investor coming in and giving in better than expected valuation. And also, we may hear in the upcoming AGM about timelines for the potential IPO for both the Jio as well as the retail business, or the potential listing or demerger that can create long-term value for the shareholders, as we have seen for Jio Financial Services also. So we see this investment as positive for Reliance Industries, and we have a buy rating on this stock.
But in terms of timelines for the IPO, do you expect something like that to come through in the AGM? Because, AGMs are generally not the forum for announcing timelines of IPOs. I mean, this time maybe this thing may be different, but Devanshu Datta is also with us. Devanshu, your own expectations from the AGM this time?
I think I'm coming. I would like to stick to that angle, and it's a platform to essentially cement that message that Reliance is the dominant retailer in the market, and whatever premium or whatever valuation is being expressed is something which is justified. If you look at it from a competitive perspective, they're head and shoulders above every other retailer. They have kind of delivered on their promise in terms of multi-vertical growth, across the spectrum, and they're in different segments. So I think the AGM may be a good platform to announce it, the IPO, or they may defer that decision to a later event. But irrespective, I think the messaging is very, very clear.
Okay, all right. Got that point, Devanshu. Thanks for that. Well, Abhishek, coming back to you, the valuation is doubled, right, at around 100 billion odd. But even the operating performance has improved. From the last dilution to this, well, they're close to 20,000 crores in terms of EBITDA. So the financial performance as well has kept up pace. My question to you is, how do you see the financials improving from here on for this particular vertical? And also, since now the big boss is there, do you expect further pressure on DMart? Because if I look at DMart, that stock has gradually been seeing a lot of selling in the last 18 months or so. Any relation or no relation whatsoever?
DMart we are not covering, so I would not be able to comment on that. But for Reliance, we see that they are improving their market share. That They're acquiring new brands. They're coming out with new FMCG products in the market. So they will continue to see the above industry growth rate and market share gain. They're clocking in a EBITDA margin of more than 7% consistently now. So the growth trajectory for Reliance Retail will remain robust over next few years in our view.
Okay. Dipan, coming to the stock, right, I wanted your thoughts because the stock has done nothing this entire year. I mean, 1 year back, the stock was at 2630. Today, it's in fact at 2500. So it's, fallen compared to what the market has done. Why do you think that is? Is it because of the thing you started the discussion with, saying that, there's so many businesses now, some doing well, some not so well. So it's kind of become confusing for investors as well. Until these listings happen, perhaps the stock may not give you disproportionate returns compared to the market. Is that the feeling you're getting?
Well, one cannot really pin it down to one specific reason. But by and large, I think from our perspective, certainly when we are looking at Reliance Industries, that's one of the kind of factors to consider. But apart from that, you should add the fact that you have got shares of Jio Financial, free shares of Jio Financial. So you add that to your return as well, and then you have a positive gain for the year. But on the whole, I think large cap stocks have not been doing well the past 6 to 12 months or so. And what we have seen is largely a mid cap rally. And even not just Reliance, but even the likes of HDFC Bank, ICICI Bank have kind of underperformed. So, but these phases do take place, and it doesn't mean that the fundamentals of Reliance Industries are in any way, deteriorated by any standard at all. In fact, quarter after quarter, they are delivering on their strategies and on their business plans. And if you look at all the businesses of Reliance Industries, the jewel in the crown from our perspective is Reliance Retail. Given the kind of secular growth that it can generate over the next few years, this entire unorganized to organized investment theme is best played through Reliance Retail. It's just that we cannot buy it on a standalone basis.
Okay. Devanshu, one last question from my end on the retail business itself. You were talking about how the growth in the retail business has been outstanding over the last many years. If you just map the last 6-7 quarters, right, from an average revenue base of around about 58-60,000 crores, the retail business is now doing almost 70,000 crore revenue per quarter. What kind of an upside, what kind of a realistic growth are you penciling in for Reliance Retail?
It would be optimistic to kind of expect the same kind of growth because you've got the baseline effect of the COVID pandemic before that. But the fact is that the inflationary pressure is coming off. And in terms of competition, Reliance has, established itself. Space has been vacated by Future Retail to a certain extent. Consumption is growing. So I think we should be expecting very healthy quarter-on-quarter growth. And apart from that, the fact is that the retail footprint itself will grow. So I think both of those engines will be firing for Reliance.
Okay, well, interesting chat, guys. Thanks very much for joining us with a take on Reliance Retail, the investment which has come in, and of course, what it means for RIL as well. Well, let's move on. Anuj is now joining in with a quick trade setup and how he's seeing things. Anuj, good morning.
Good morning, Prashant. Well, you know what? The index I'm focusing on is Bank Nifty after yesterday's big breakout. And that breakout happened as soon as you crossed 44,205, which was a level that we were watching out for. And it looks like it's set to cross the 20 and the 50-day moving average in the gap up. That level is 44,725 to be precise. The Nifty also set to cross 19,529 or at least test 19,529, which is the 20-day moving average. The issue is if this gap up sustains after yesterday's rally. If it does, then expect short covering. And if that is the case, then focus on stocks or indices where you have shorts. Let's go through that. The Bank Nifty, which is 4% off highs, and the Nifty, which is 2.7% off highs. But more importantly, some big stocks. Kotak Mahindra Bank, 14%. Bajaj Finance, 11%. HDFC Bank, 10%. SBI, 8%. And Tata Motors, around 8% of the highs. I think the game today is about sustaining the 20-day moving average on the Nifty. If it does, then you expect more short covering. Weekly expiry today, and yesterday was the first day of fresh move. Normally in our markets, the expansion moves last for 3 days. The second day is even bigger, and third day in the first half, you normally have a move. So yesterday was the first day. Let's see. The only risk is that if this breakout was false or a fake breakout, I think we'll know that if you start to break yesterday's low. So that becomes sacrosanct level. Now, in terms of levels to watch out for both the Nifty and the Bank Nifty on the upside, the first level I'm watching out for on the Nifty is 19,528, which is the 20-day moving average. And the biggest is 19,648, which was a last swing high that we hit about 2 weeks back. And from there, the market started consolidating. First support 19,444, the yesterday's closing level, and 19,366, yesterday's low. This zone is very important for the Nifty to defend. On the Bank Nifty, let's look at what 44,500 call did yesterday. Despite the big rally, there was a lot of call writing towards the end in 44,500 call. In fact, open interest of almost 50 lakh shares and premium of only 104 rupees. So if you start to cross 44,604, which is the first resistance, I think there would be some nervousness among those call writers. And the bigger resistance would come in at 44,725, which is a 20 and 50-day moving average. If you start to close above that, or start to trade above that even for an hour, you would see big short covering. And the stock I'm watching out for actually is HDFC Bank. If that starts to fire, I think you can see big rally. But that's a big if. That's underperformed for so many days. Support comes in at 44,479, yesterday's close, and 44,205, which was the breakout zone. Erstwhile resistance should now act as support.
All right, Anuj, thanks a lot for that. Well, that's the market setup as Anuj sees it. Let's slip into a quick break. We have many more experts coming through. In the next half an hour, Mitesh Thakkar, Sudarshan Sukhani will join in for some technical trades.
Okay, welcome back. So we've got, 7 minutes to go for the pre-open session. Mitesh is joining in, and so is Sudarshan Sukhani to run us through the trade setup. Gentlemen, good morning. Good to have you both as always here. Mitesh, is this the one? Will markets pick up pace, cross the 20-day moving average, which is 100 points from yesterday's close? We probably get a open around there. Will you wait for a close above that to take further positions? What's the game plan?
Morning, Prashant. I think between the two indices, today I will be watching the Bank Nifty close. One reason, it fired a strong buy signal yesterday and managed to meet the first targets around 44,500. Now, I want to see on the hourly charts, the Bank Nifty marching past this level. I think that should open up, some upsides of around 500 to 700 points on the intraday charts, as I was mentioning. So I think that will propel the Nifty further up. Banks have been underperforming. I think yesterday's signal was a suggestion that they'll try to catch up and cover up on some part of the underperformance at least. I think that's where the focus would be. I would keep a very close watch on the Bank Nifty, and I've been maintaining that we've hit the lower end of the range around 19,250. Now we are possibly exploring a retest of the upper end of the range, which could be closer to 19,650, 700 zone. So as such, we're positively biased, but especially for today, I think Bank Nifty would be the trigger. Getting past 44,550 should call for a long trade immediately.
Okay, thanks for that. Well, Sudarshan Sukhani has also joined in now to talk about the market setup. Sudarshan, the market has pulled back a bit. Do you think this pullback could continue on the upside? And if yes, what are the levels to watch?
Good morning. I can't say if it will continue, but the fact remains that the Nifty is likely to open above 19,450, which was the resistance area. So the trader has to take a long position. You try to buy it on a dip, and then we have to hope that it continues. But the breakouts from trading ranges are usually reliable. We just have to find out if this one is also so. Now the Bank Nifty had that big wide range day yesterday. That's a buy on dips, but there's no sense in running after it at the open. The traders have to wait patiently for significant dips. But the trade is, if you get a dip, go and buy it.
Okay, all right, got that. Mitesh, what about your calls for the day? You give us a trade on the index, but individual stocks?
Morning, Nigel. Since I have a positive bias and mildly, favoring the Bank Nifty, I have two banking names on the buy list. RBL Bank is a buy with a stop at 223. I would look for targets of around 245 here. While ICICI Bank is also a buy, keep a stop below 957. Look for a target of 985 here. One mid-cap name, fertilizers were buzzing yesterday. Good breakouts over there. So RCF makes on the list. It's a buy with a stop at 116 for targets of around 128 to about 130. And one sell call, Torrent Pharma. There was clearly a news over there, but the price action was also very negative. So this could see more profit booking. Torrent Pharma is a sell with a stop at 1965 for targets of 1870.
Okay, and Sudarshan?
Well, Divi's Lab and Godrej Properties both have similar patterns. Decent up moves, then correction, and now imminent breakouts from trading ranges. Divi's Lab is a buy with a stop under 3,600, and Godrej Properties is a buy with a stop under 1,550. JK Cement is an intraday short. The stock has been falling relentlessly. Stop above 3,140. And finally, HDFC AMC has a very attractive continuation pattern. Consider buying that. Keep a wide stop at 2,400.
Okay, let's take a quick break on that note. On the other side of the break, we'll continue chatting about the markets. We'll also have the pre-opening rates as well as Vikash Singh, the Vice President, Metals and Mining at Phillip Capital, will be joining in to discuss the trends in the metal space and his top picks from the sector. Stay tuned. Welcome back. This is the Open Exchange live from the CNBC-TV18 Motilal Oswal studio. Let's go straight to Chandan Taparia, Derivative and Technical Analyst at Motilal Oswal Financial Services. to give us his, F&O ideas as well as his strategy for the day. Looks like the market is trending upwards, Chandan. Your thoughts on that? And what are the stocks that you're looking at today?
Good morning, Sonia. Thanks for having me. So we have seen good recovery on the last trading session, and mainly contribution was seen from the Bank Nifty index. Selective banking index really have done well. So first, if I look at the Nifty index, it has recently taken support at its 50-day mark that was near to 19,250. And after that, from last 3 days, supports are slightly shifting higher. We have hurdled near to 20-day mark after taking support at 50-day mark that goes to 19,560 level. So we believe that with support of 19,350, now index can bounce to 19,560 to 19,650 zone. So overall, positive bias could be there. And today is the weekly expiry, and we are trading higher than the volume weighted average for the week. In fact, the put writing is also visible at 19,400 with coal unwinding. That is also giving the scope for some uptick in the Nifty index. So with support of 19,350, we'll play the move towards 19,560, 19,650 zone. Now talking about the Bank Nifty index, it formed a strong bullish candle on last trading session. We have seen some put writing, coal unwinding pressure was also seen, and most of the banking stocks were doing well, including Axis, ICICI Bank. So with support of 44,150, Bank Nifty has potential to move towards 44,750 to 45,000. Now looking at the stock wise, first trade I'll take from the banking space, as Bank Nifty is comparatively doing well. So there is buy on Axis Bank. This stock has negated the lower highs, lower lows on the weekly scale after the decline of last 6-7 weeks. It has surpassed its key moving average. We have seen some open interest shedding by 5%, which clearly indicates short covering move. So recommending to buy on Axis Bank with a stop loss of 960, and this stock can move towards 1,020 level. Second trading idea, that is from the defense, buy on HAL. Major trend is intact, and it is now completing the consolidation of last 10 weeks. Supports are gradually shifting higher. It is all set for the fresh breakout. Open interest added by around 10%. So recommending to buy on HAL with a stop loss of 39.30. And this time this stock can head towards 4,200 to 4,250 level. Last trading idea, that is buy on L&T from Capital Goods. L&T has seen the consolidation breakout of last 18 days. But even after that, on weekly scale, supports are gradually shifting higher. It is making higher lows, and supports are shifting higher with put writing activity. So expecting momentum of 3 to 5% in the counter. One can buy for an upside move towards 28.30. Keep the stop loss of 26.65 to play the upside of L&T.
Okay, thanks a lot for that. Well, Dipan Mehta is still with us, so let's get just one more call from him. Dipan, I wanted your thoughts on some of these technology stocks that have been big movers this month. So in the month of August, for example, Tech Mahindra is up already about, I think, 10% this month, and this year about 20%. Do you see more upsides here?
No, Sonia, I think, pretty disappointed with Tech Mahindra's performance last few quarters or so. And I know the telecom opportunity is huge and the world is moving towards 5G, but one would have expected that a telecom expert would certainly report better growth rates, and certainly that's a possibility going ahead. But all I would say is the reason for the upswing could be some bottom fishing and cheap valuations. But we remain firmly committed to the mid-cap space. I think that's where the growth is going to be, and people will always pay premium for secular long-term growth. And that's where I think a lot of mid-cap stocks will be favored over large-cap software companies.
Dipan, always good hearing your thoughts. Thanks so much for stopping by and having a quick chat with us early this morning. Wishing you a good session ahead and a good evening as well later on in the day. But for the time being, let's focus on the sector that's been shining. That's the metal space. Metal stocks have been doing quite well this week. The hope is that they're going to see a big stimulus coming out from China. The dollar index has slipped a little bit as well, which could bode well for them. To understand how do you approach the metal stocks, Vikas Singh, VP at Metals and Mining, and Phillip Capital joins us on the show. Hi, Vikas. Good to see you after a while and hope all well at your end. Well, Vikas, tell us, how do you approach the metal stocks from here on? The hope is about stimulus coming in from China. But do you think that it will be good enough to push these stocks higher? Point number one. And how do you approach them? Do you like ferrous or non-ferrous if that much awaited stimulus comes about?
Good morning, Nigel. So basically, we are betting more on the ferrous side than non-ferrous. Largely, there is a hope that the China stimulus would come, though nothing concrete has been come as of now. But the government stance is pretty.
Okay, all right. I think we'll have to reconnect with Vikas. But the first take that we got was that they like the ferrous in comparison to the non-ferrous space. And though nothing concrete has been announced from the Chinese government out there, but the expectations are that there will be some stimulus to come about. Just to tell our viewers what's going on there, China, they're expected to announce a stimulus. That normally what pushes up prices. The only problem that I have is that coking coal costs as well have gone up. So steel prices are moving up, but coking coal costs as well are moving up. So the spreads we'll have to check out, and we'll have to wait by on that front.
Okay, we'll wait for the gentleman to join us again. But just a couple of pointers and pre-opening. The rupee, by the way, is at a 3-week high. So the opening is just kicking in at the moment. 82.47 to the dollar, which is a 3-week high that the currency is sitting on. So do keep an eye out on that. Coforge is in focus as well. So we'll look at that stock. L&T, Tata Elxsi, a couple of other names that are in focus this morning. So keep an eye out on them. And in pre-opening, L&T, by the way, is up almost about 1.5%. But I think Vikash is back with us.
Vikash is back with us. Vikash, you're making that point. You like ferrous in comparison to non-ferrous. Please complete that point.
Yeah, sorry for the technical difficulty. So ferrous I like more than non-ferrous. There are two reasons. That in ferrous, China also has a basically tendency that they would keep the production of the steel intact, at least if not higher on a year-on-year basis. Already they are 2.5% higher in the first 7 months. That calls for a 4% cut in the next 5 months on a year-on-year basis. So it's not the demand upgradation where we are banking on, but rather than the production cuts in China, which also bodes well with the fact that the Chinese mills are not making any profitability. At the same time in India, basically, we are into an election year. Monsoon is almost at its fag end, and the prices post-monsoon usually keeps on increasing. So ferrous, I think in the next 6 months would do much better than non-ferrous, because non-ferrous does not have that luxury of Chinese production cuts or even a better domestic demand.
Okay. I also wanted your thought on the steel stocks, Vikash. What are you looking at? What do you prefer there? And, with a 12-month time frame, what are your top picks?
Our top picks are Tata Steel and SAIL at this point of time, and Hindalco in the ferrous and non-ferrous test combined.
Okay. Okay, all right. Vikas, I wanted to ask you about NMDC Steel. I mean, that stock is moving one way north. They've just started the blast furnace, but the street is expecting the asset to go at a big premium. How would you value that asset? They'll have some kind of backward integration as well. A 3 million ton plant, EV, what are you factoring in?
Hi. So actually, they don't have a backward integration, but they would have an arrangement with NMDC mining company to get the iron ore at the market price. So it's not actually an integration. While if you look at the current market price, including the peak debt which the company could have, they are already at somewhere around 18,000-19,000 crore kind of the EV. Versus next 2 years, we don't see much of the profits coming in. At least the net loss level is expected. So I think that it's already at a good EV, and some profit booking should happen at this price, because plant is located in Bazaar, and this is logistically a little bit challenging area. So I'm exactly not sure that what kind of the profitability the company can make in the longer term, but it would be difficult to run the plant without NMDC support. So at 19 to 20,000 kind of the EV, I would see that the profit booking can be done, because in past most of the assets has gone at around the same levels of EVs, basically 5 to 6,000 crore per million ton.
Okay, all right, Vikas. So 20,000 crores of EV is already what we are at. 15,000 crore market cap, 5,000 crore debt. And it just meant that they have a short supply coming in from NMDC, which is being run by the same entity itself. Final question then, how do you see steel spreads move from here? The talk was that steel prices will stay stable and coking coal costs will come down. Do you expect that to continue? Spreads will hold or expand?
So we are also expecting spread to go up from here onwards. Though the steel prices have come down in the past couple of months, but it's rising again, as well as the coking coal prices. But the fall in the coking coal prices is still higher than the fall in the steel prices. So therefore, net, the steel spread should be marginally better than what we have seen in the 1Q.
Okay, thanks a lot for joining us, Vikash. Have a great day. Let's get back to the market now, which is looking pretty good actually at the moment. And all of these companies that are in focus post the Chandrayaan 3 mission being successful, all of the suppliers are doing pretty well, whether it's L&T, whether it's BHEL, MTAR Tech, Midhani, most of these stocks actually, there's a sentiment bump up over there. But let's get some 9-10 calls going. Sudarshan, what's the big call at 9-10?
HDFC AMC Bank is the buy with a stop under 2400.
About you?
I'll go with the buy on RBL Bank for targets of 245.
Okay, let's also talk about Coforge and the big deal that's that's taking place over there. Reema's here with the latest on that. Reema, over to you.
Thanks so much for that. So we understand that the promoters of Coforge, that's Bearings, is likely to exit completely, sell its entire stake of 26.6% stake in the company. This is something Abhishek had picked up. The floor price has been set at 4,550, and this is going to be a very, very large deal, close to about $900 million. While in the immediate term, there will be a negative because we're talking about a very large supply of nearly 27% stake, but over the longer term, analysts I spoke to said that in a way it's a positive because at least now the stake sale overhang is out. 4 years back, the promoter, Bearings, had a 70% stake. They've been periodically bringing their stake down, and currently it's a 26.6% stake. So at least that fear of a impending stake sale is out of the way. Secondly, if you watch the way the stock has performed, despite so many stake sales, the stock has actually done pretty well. It's doubled from the time Bearings had bought that stake. Also, the stock, the shareholders in the company are quite marquee. You've got an FPI holding of close to about 25% stake, and the revenue growth for the company has been very solid over the last 3 years. Back to you.
Okay, well, thanks very much, Reema, for that. Well, let's just focus back on Reliance, right, and the transaction which has happened. Reliance Retail. Nisha is here to shine the spotlight once again on that one. Nisha, over to you.
Thanks a lot for that, Prashant. Yes, it's a big announcement coming in from the large conglomerate Reliance Industries, where retail arm Reliance Retail Ventures has raised 8,278 crore rupees by selling 0.99% stake, just shy of 1%, to Qatar Investment Authority. Now, what this does to the company is that it values the company at $100 billion with this 1% investment. And also to note that in 3 years' time, from 2020, when a large number of investors had invested in the company, to now, it is double the valuation of the company from $50 billion to $100 billion. What it does is that it sets a benchmark valuation for the company at $100 billion with a large global player coming in and pumping in money. On the other hand, it also raises the expectations of the IPO expectations from the AGM announcements. So all eyes would be on the AGM upcoming on 28th of August. But remember that some of the brokerages have been thinking and saying that if this is part of a wider, more rounds of investments coming in at this particular valuation, it will validate this particular $100 billion of valuation, because it's just 1% that QIA has bought. And also CLSA says that this will act as a softer floor price for the Reliance's stock, and any discussion on IPO in the upcoming AGM will be a trigger point. And same is the case with Citi as well. It says that on Reliance Industries, the expectations of some positive update on the eventual listing of Reliance Retail at the AGM will be most looked out for. So setting a valuation, whether it will be validated with more rounds and more investors coming in, will be watched out very, very closely. In a statement, QIA has mentioned the innovative as well as the digital thrust for the retail and how it's backing. Remember, QIA is making its debut in this particular company as its investment.
Sure. Thanks a lot for that, actually. So we'll keep our eye out on Reliance Industries. We're just heading into the market opening. Before that, just one stock, MTAR Tech, and we'll talk about that in greater detail in a bit. It's up 9%. It had a big association with the Chandrayaan 3 mission. It supplied engines, etc., turbo pumps, booster pumps. So that stock is up almost 9% now. So we'll keep an eye out on that. But here's the opening bell. The first tick on the index coming through to you in just a bit. That's a good opening, you'd have to say, just like the mission, right? Zooming away like a rocket. 80
today you
points.
should have sent off to the moon or something.
I thought that was a little too cliche, right? But on the moon now. Well, the Nifty over the moon as well. Look at that. I mean, say 70 points higher now. 19,500 is something that's holding. And the mid-cap index up 0.7%. The Bank Nifty in the green. So gotten off to a good start. Poetic start, actually, given the kind of celebrations that we had yesterday, right? The markets also, in their own way, celebrating. The sensex up 240 points. Let's take a look at the big gainers. Adani Enterprises, Adani Ports in the green. Wipro, L&T up almost 1%. In fact, all of these companies that have been supplying for the Chandrayaan 3 mission or even remotely associated with it are doing pretty well, whether it's, MTAR Tech, L&T, BHEL, Midhani and the likes. We'll talk about that in a bit. Apart from that, IT stocks doing well. Tech Mahindra, Infosys in the green. LTI Mindtree in the green as well. Tata Motors, JSW Steel, Tata Consumer Products also holding up on the green line. In fact, barely any stocks that are in the red. By the way, there's a big deal on Manappuram that's happened. 11% equity has changed hands, so just keep an eye out on that. And Coforge, of course, the deal is done now. So 25% equity changed hands. Bearings exiting entirely. So Coforge is the other one that we're looking at this morning. But apart from that, it's a decent opening. The action really is in the mid-cap index. Just look at that. Flying away now, 300 points higher. So, well, that's where the focus should be.
Well, indeed, Sonia, you mentioned it, right? The Chandrayaan-related stocks, you had MTAR that's higher, but take a look at Paras Defense, that as well as higher, and Centrum Electronics as well, that's another one. So all of them up anything between 8 to around 15% after having a very good trading session yesterday. Max Financial, we were waiting a large trade. Nimesh had given us that buzz on D-Street Chatter. Well, that stock post the large trade is up close to around 6%, so that's done pretty well. You have a couple of other notable names. Snowman Logistics, the promoter entity, Gateway District Parks, has gone ahead and bought another 11 lakh shares. Remember, just a month or so ago, they had increased their stake. And now they bought another 11 lakh shares odd. The street likes that. That only amounts to 0.7%, but that one has opened up with a gain of close to around 3%. Suzlon makes a fresh 52-week high, so that one's moving from strength to strength. And Vascon Engineering, well, that got a letter of acceptance worth around 605 crore rupees from Bihar Medical Services and Infrastructure. So that explains why that smaller name is up 8%. Atul Auto, Societe Generale, well, they bought close to around 0.7% in the company. Yesterday, the stock was up, and today as well, it opens in the green with a gain of around 3%. A couple of large trades took place. Sonia mentioned Manappuram, so that stock, in fact, is higher and is lower now as we speak. But Coforge, post that trade taking place, the 25% odd equity, the selling overhang is out of the way. Explains why that stock is zoomed up close to around 3%. Just pull up the intraday chart. It's at the high point of the day. 1.5 crore shares changing hands, close to around 7,300 crores odd of equity changing hands. And that one's off to the races. Intraday chart comes up, tells you the picture. Prashant.
Coforge had actually come off over the last 3-4 days. Maybe the market had some inkling or whatever. But 5 days back, it was at 5,400. From 5,400, it had sold off to about 4,850 or so yesterday's low. So it's kind of making its way back up a little bit. So 5,000 plus on Coforge. Just a few other names before we, go any further. So, I was mentioning how all the Adani Group stocks got smashed yesterday in the last 60 minutes. They're recovering. So Adani Enterprises is up 3%. I can spot Adani Power, which is up 4.5%. At least these are the two which come up with volumes right now. I think we mentioned Paras Defense. Paras Defense is up 13%. And it's a number 3 volume traded stock, not in defense, but in the market. So huge volumes on Paras Defense, and it's zooming up. Well, MTAR Tech we mentioned, definitely 7.5% higher. Max Financial is the other one, right? 6% up on Max Financial, 931 is where that one is. That's a big mover. Max Financial has been an underperformer even within insurance, which is not as a sector done very well. Midhani has, of course, looking up. Suzlon is slowly inching up. It was stuck at about that 20-ish level after doubling, but now at about 22.35. So starting, to move. I noticed yesterday as well. Atul Auto had this massive move yesterday. I think Atul Auto from 377 day before yesterday closed at 440. Big move, and it's starting about 3% higher, although already from the day's opening high, it's lost a little bit. Indian Overseas Bank is up 3%. First of the PSU names that I'm seeing on the list here this morning. Ease My Trip starts about 3% in the green. There is Titagarh, which is up 3%. Ujjivan Small Finance Bank is up about 2.5%. And then, volumes will start to taper off. Maybe one more name, which is Mapma India, which is coming up with about a 3%, 3.5% pop right now. The big outperformer over the last many days, which is Linde India, that is seeing a bit of a cooling off. It's down 3%. Stock run up very sharply in 3 or 4 sessions. And GMDC is the other one, which spiked about 10% yesterday, maybe a little bit more. It's coming off a little bit, just 1% odd pullback on volume. So just pointing that out. Sonia?
I just want to point out one theme, right, that's played out really well this year and come back in a big way is this whole home improvement theme.
Yeah.
So Polycab, for example, has now hit a fresh high and it's up 100% this year. So it's doubled this year, Polycab, at about 5141 rupees. Phenomenal mover there. Phenolics Industries is the other one. It's, at a fresh 52-week high as well. And we've been talking about real estate demand and how it's come through in a big way. There is, I'm just coming back from Bangalore, right? There is rapid urbanization in Bangalore. I mean, it's breathtaking to see. It's also concerning because the green cover has gone down so much. Yeah. But so many of these new projects that have come out, whether it's from Brigade, whether it's from Prestige, selling out like hotcakes. So there's somebody who's got to supply the cables, the wires, the taps, faucets. So, I mean, all of these stocks doing really well.
Besides the fundamental reason for Polycab as well as Tata Communications, I was talking about that MSCI review in November. These two are the highly probable names that come in there. So that could be another reason that, Polycab as well as Tata Communications in the build-up to that rejig that happens in November, they could be further in focus. Besides the fundamental reason, you have a technical reason as well to back them up.
Well, on a lighter note, does Polycab need any reason to? It's like, it's absolutely crazy, right? I mean, the outperformance, not a few years back, was $500, I mean, and 5,000 now. IPCA Labs, I mean, I think this, will just quickly put the stock price up and take a look at what's happening there. So IPCA is up about 2% or so. There is this news as well. US FDA has classified the Piparia unit as voluntary action indicated. Piparia unit in compliance with current GMP practices. We'll have Ekta join us in a bit for more on this. Sanjay Mukim is joining us now, strategist, head of India Equity Research at JP Morgan India. Sanjay, good to have you with us here. Thank you very much. Welcome back. Your last note is titled Hunt for Value in India. So where is value, Sanjay? Let's straight off the bat address that.
Well, it's a different concept of value than what is intuitive. And before I answer that question, the way we think about the global macro is that the second half is going to be a little bit more different or a little bit tighter than the first half has been. The first half of the year, you've seen this massive rally in equity prices. Just as the Fed injected liquidity to bail out small banks, it catalyzed a rally in equities everywhere. And if you look at the chart in dollar terms for the Nifty and the S&P, they're the same chart, right? There is absolutely zero difference between the Nifty in dollars and the S&P in dollars. So it has been, and while, sitting here, we look for, specific bottom-up reasons for the market to do well and so on. It's actually, there's a big, very strong global macro overlay explanation for what's happening in India. And that's where the value argument comes in, because as liquidity is now tightening and central bank balance sheets are now starting to contract everywhere, you get this shift from the growthy style and the growth stuff that works to value that tends to work when liquidity becomes tighter. And what we've tried to do in our research is to look for value in a very empirical manner, to say that, look, not to look for stuff which is cheap, but from an empirical analysis, what are the stocks that tend to do well when value as a style does well globally. So that's the research that we put out yesterday. Unfortunately, I can't name those stocks on TV, but there is an interesting set of companies that historically has correlated well when value as a style has worked globally everywhere.
Okay. Sanjay, good morning and thanks a lot for joining in. I have to ask you about this entire defense, aerospace, space in general, right? This entire vertical that's doing exceptionally well. I mean, Bharat Forge was telling us they are sitting on an order pipeline of around 2,000 crores of defense orders in the export business, and there is order visibility of another 3,000 crores in the domestic market as well. That's the kind of scope. Is this a space that you like even now, despite the kind of rally that we've seen in individual stocks?
We don't actually cover many of these names, unfortunately, but conceptually there is significant tailwinds in that the government has this large indigenization drive, which is catalyzing the export capabilities of a lot of Indian private and PSU companies. And this should sustain, right? India's defense budgets will continue to grow with the economy. The capabilities of Indian defense companies will continue to expand. I can't comment on whether they are cheap enough now after the rally or not. We don't cover many of these. But the underlying structural theme does look to be persistent.
Hi, Sanjay. Good morning. The rural theme or the rural part of the country has been struggling, right? Urban obviously has been doing well. Rural is struggling. But in a run-up to the election, you're expecting spends to improve and hopefully things improve on ground as well. Given that sort of a backdrop, how do you play that? Do you play it via staples? Do you play it via two-wheeler space? Are you positive on any of those themes?
So we've argued that irrespective of whether the elections lead to any sort of spending bump or not, and that's a very binary thing, frankly, we'll see how it plays out, the underlying drivers of consumption in the lower income households. Now, the sort of qualification I'll make here is people tend to divide this into a rural-urban split. I'd actually argue that this is more a rich-poor split, a higher income household, lower income household split in terms of demand trajectories. And the lower income households have struggled through the pandemic because they've had to reduce savings. I mean, there's loss of income, expenditure going up on inflation, and as a result, a weaker balance sheet at lower income households. And there are many indicators that it is being repaired. Whatever data we get on jobs, we can argue, and this is very patchy data, unfortunately, but it does seem like all the jobs that were lost in the pandemic have finally been restored. Wage growth seems to be improving everywhere. Consumer confidence data is starting to look up. So yes, the cohort of the bottom 80% of India, the mid to low income households, does seem to be in a better place than it was previously. Now, it's a question of time, right? How quickly and when do you see the basket of consumption exposed to this set look better? We have argued essentially from early this year that two-wheelers look great, because they've been under pressure for several years now, and you should start to see the recovery. It's playing out, a bit patchy, unfortunately, but it is playing out, and we like that space still. And staples, especially the laggard staples, would look very interesting as you start to see, the volume recovery in the lower income households.
Okay, got it. Sanjay, in terms of what you've published out there, and I mean, you've got, the stocks that you like across your analyst team, just talk to us about the idiosyncratic opportunities. Doesn't need to really be sector specific. Which are the big opportunities from here out? Slightly medium term, I mean, I think very near term, of course, is hard to tell. But what are the top bets, really?
So again, I'm constrained in that I can't name stocks on a channel. But the sectors that we have liked from a thematic structural view of stuff that we cover, we like real estate, and I heard you guys talk about it. The momentum is strong. It will likely remain strong. The penetration of households, apartment ownerships in India is extremely low, and there's years worth of potential headroom for that to continue to grow. RERA has catalyzed, it's changed the way business is done, and we expect that this momentum should be very sustainable. The second space we like medium term is hospitals. Again, there is a lot of shift amongst the consumption of healthcare from public to private, along with the improvement in medical tourism. You are seeing the advantages of Indian hospitals play out, and valuations can be a bit daunting, but that space also looks very structural to us. A slightly longer term space that we like is, or we have liked historically, is insurance, where you should continue to get the shift, A, growth in the insurance pie, and B, the shift from the public sector to private sector insurance companies.
Okay, by the way, I do want to point out that Paytm is definitely the stock in focus right now. The stock is up almost 74% this year, by the way. And my colleague Hormus very helpfully points out that the stock is at an 18-month high as we speak. Sanjay, I wanted your thoughts here, because many of these platform companies have come back in a big way, right? Whether it is, some of them like Paytm delivering good returns, Zomato's being profitable for the first time. What is your thought here? Do you in general stay away from these new age platform companies, or are you doing some, nibbling in here?
So in my model portfolio, I have none of these, right? And there is fundamental improvement, to be honest, and these companies have delivered numbers, turned profitable, let's say, faster than analysts had forecasted. At least some of them have. There are some which are struggling for cash flow and profits even today. But the reason I am a little bit suspicious myself is that, look, establishing valuations for some of these is very difficult still, because a lot of the potential cash flow for these businesses is very back-ended. And that makes this kind of companies, the platform companies, very susceptible to cost of capital assumptions, to how optimistic you are of the future, etc. So these are very high beta stocks. And if you'll see, they have worked exactly in line with the growth trade globally. When tech was doing well everywhere in the world, Indian platform company stocks have also done very well. And since I've argued earlier that growth style is now going under pressure and it's turning down, it may not be very advisable to chase these stocks after this big rally anymore.
Okay, all right. We'll leave it at that, Sanjay. Thanks a lot for joining in. Appreciate your thoughts here on CNBC TV18. Well, that's the word coming in on the market, which, by the way, is just zooming now. So take a look at the Nifty, like a rocket, 100 points higher at 19,550. Mid-caps are up about 1%. I think the puns are not going to end today, right?
Come on, use the moon thing now, yeah. So 100 points.
Over the moon. Okay, fine, Prashant, over the moon.
Who cares? It's cliche. I think we spend too much time trying to avoid cliches.
I think in so many years, all we do is use cliches. You know that, right?
Well, I think now we spend far too much time trying to avoid cliches. Right? We come up with all kinds of things.
Now it's valid, though. Now it's valid. We're on the moon this morning. Sensex up about almost 400 points, looking pretty good. But our focus is on ABB India. After declaring its results, ABB Global flagged off a lot of worries as far as global capex recovery is concerned. The order inflow for the group worldwide also wasn't good, but they said that the Indian operations are growing well. My colleague Vivek interacted with the company's managing director Sanjeev Sharma and the chief financial officer TK Sridhar started by asking about the India growth story. Listen into what they had to say.
It is true that not only ABB India, but India is shining in terms of how the growth is sustaining here and is much more broad-based. And ABB, as such, with our portfolio, has 18 divisions operating in this country, and all of them are highly localized. And we have factories which are producing products which are as local as 100%. And we are participating in 23 market segments. That kind of a resilience in the market is actually playing well for ABB India, and India is doing well at this point of time.
Before we get into Q2 results, what I want to ask you is, yesterday to the exchanges, you've given a very interesting update on an order that you've got from Reliance Life Sciences. Tell us a little bit about the order itself, the scope, and when does it start kicking in as far as ABB's financials are concerned?
In this case, our customer is setting up a life sciences. It's actually the biosimilar and protein manufacturing unit in Nashik. And ABB is participating in supporting our customer with the control and automation system, which will essentially manage the process as well as the batches that will be produced there. So it's a core and the central part of any manufacturing facility. So we are very, very happy to be participating.
I want to talk to you about Q2 results. Q2 CY23, handsomely beat all the analyst estimates by a large margin. Number one, you did see a very strong margin expansion. Can that sustain going forward? Because a lot of analysts believe that this was both pricing-led as well as operating leverage benefits kicking in. In that context, can pricing sustain, given the fact that we understand that you are seeing competition, especially from global players that are participating in the domestic market? So can the margin recovery especially sustain? And we'll come to the order flow aspect as well in a bit.
Right. Thanks, Vivek, for this question. I think we are quite familiar with this question, and we have this from all the analysts every time. So I think the first thing is that how does this margin come from? I think the material cost is a major component of how the margin is derived. So we are today trending at 63.5 or less than 64. And that's more led by, as you rightly said, by a bit of a price increase which we have in the markets for all the products what we are supplying. And also the operational advantages what we have in terms of capacities which we are utilizing or leveraging at this point of time. I think as far as capacities is concerned, we have sufficient capacities to manage the growth requirements of the country as well as the organization as such. And when it comes to the pricing factor of it, it's all a play of what customers need as a technology, and the technology definitely derives a premium in the market. And therefore, we, ABB, having a technology product, definitely are hopeful that we would be able to sustain this particular price advantage what we have at this point of time.
So currently, you're not very worried about competition. You're confident that margins can sustain both on back of pricing as well as operating leverage.
As actually what Sanjeev was mentioning, so we're in 23 market segments, right? And all these 23 market segments have their different characteristics of their own. So I think this is the way I think we have a good play, and also the fact that we are in Tier 3 and Tier 4 cities, or towns as well, right? That gives us a good mix of where we pick up orders from and how it drives the pricing for those markets.
I want to talk to you about order inflows. Order inflows was quite strong. Q2, however, was helped by a very large order from ArcelorMittal as well. order inflow came in at over 3,040 crore for Q2, and base orders were higher by 4%. This is despite the fact that you actually had a very strong base. So order inflow, especially in Q2, is quite strong. Can this sustain, especially now in the backdrop of this being a pre-election year? So how is ordering activity trending out, and will you be able to confidently meet your guidance?
You're absolutely right. I think the orders in the last quarter on a very higher base were quite strong and resilient, and it is contributing to our backlog, which is 29% higher than the previous year. So that's something gives us a very good visibility in terms of how we will execute our revenues going forward. And it's a good thing that, among the 23 market segments, we had very agile market segments which were growing faster. And it's good to see now the core segments also have started placing large orders. So that's a good mix that we are going to enjoy going forward, because we can see in our pipeline similar in the areas of steel and some other core sectors also, the capex is forming to a good level. Now going forward, we do see resilient in the most of the market segments we are operating in, but we know by nature of different market segments, they peak out, they plateau, and then they go down, and then they come back in. So the very reason we have 18 businesses exposed to 23 market segments, that gives us a certain amount of resiliency, and that too in a market which is growing quite well.
So your current order book at the end of CY22 was 8,600 crore. Your current order backlog is 730 crore, and we understand a 12 to 15% growth in orders is what we are anticipating. So right now, can we meet the upper end of the margin band or the guided band?
So I think let me give a bit of a color. First of all, we don't give a formal guidance about what it is. We give an outlook as to how we see the markets. I think for the last 3 to 4 quarters, we have been consistently growing at double-digit growth, both in orders as well as revenue. And since we have a good backlog, and that has to be converted to revenues, I think it is fair to assume that we would have a double-digit growth in revenues as well. So that's where I would like to come up with.
So let's compare, Q2 CY23 performance versus the expectations for the full year guidance. So revenue expectations closer to the 10,000 crore mark, gross margin guidance of close to 35 to 37%, and PAT margins of close to 10%. On track to achieve all this for CY23?
I think last year was an year where we started to touch 10,000 crores on the orders. And naturally, with a stronger backlog, I think our ambition is to reach the 10,000 crores in revenue as well, right? So, and I think we are very consistent in saying that first we aimed at PBT to be at double-digit margins, and now we have actually transformed it into stronger operations, due to stronger operations, the PAT percentage as well. So I think our ambition to maintain the 10% on the PAT level still is continuing.
So revenues of 10,000 crore, order inflow growth of close to 12 to 15%. That's what we are anticipating for the remainder of the 2 quarters or H2 CY23 from ABB India this time around.
Definitely. I think it depends on how the markets and prices support as well.
Okay, that's the word coming in from ABB India. Let's slip into a quick break. On the other side of the break, the big buzzing stock right now is MTAR Tech. Srinivas Reddy, the managing director at MTAR Technologies, will join in to discuss the opportunities in the Indian space sector as Chandrayaan 3 has made that soft landing on the moon successfully. So more on that coming up. Later, we'll also be joined by Mehul Mohanka, who's the MD and CEO at Tega Industries, to discuss their business outlook. Stay tuned. Welcome back. India yesterday created history as Chandrayaan 3 did that soft landing on the moon, becoming the first nation to land a probe on the southern pole of the moon and the 4th nation overall in the elite club to land on the moon. MTAR Technologies is one of the companies which is among the key supplier behind this mission. They played a crucial role by supplying Vikas engines, cryogenic engine subsystems as well. To discuss more opportunities in the Indian space sector, we are joined by Srinivas Reddy, the Managing Director at MTAR Technologies. Mr. Reddy, good morning, and congratulations to you and your entire team as well. You had as big a part to play in the success of the soft landing because of the kind of service that you've provided in terms of the supply of engines, etc. But can you tell us what is the, from a shareholder's perspective, what is the quantum of the order that you received and executed for this mission?
No, we can't. We have actually supplied the major systems for the mission, right from the liquid propulsion engines for second stage, then the cryo engines, the complete turbo pumps, injector heads, gas generators, which form the core of the cryo engines, and various other valves and safety couplers, etc. So these are the main part of the total initial launch of the vehicle, and at the later stage, the third stage of the launch vehicle. So what we should understand is this has been years and years of research done by the ISRO scientists, and MTAR also joined hands with them in terms of actually converting the designs together into manufacturing of these systems for them. And this is something really exciting for us. And obviously, I have to congratulate the chairman ISRO and the team of scientists who are behind this, learning from what happened in Chandrayaan 2 and how they have managed to correct certain things and make it happen this time.
Absolutely. No, I completely understand that this is a industry which has a very long gestation period as well. And now finally, things are seeing fruition. But just wanted to understand from your company perspective, right? I think the last time when you spoke with us, you said that you're targeting revenues in the space segment at about 70 crores by the end of FY24. Do you stick to that target? And what is the order visibility like? What are the kind of opportunities that you're getting in this segment?
So obviously, the kind of launches which are planned moving forward is something which is a lot of great encouragement for ISRO as well, in terms of, I guess, for budget allocations from the central government as such, for the kind of achievements they have done. And we already have a set plan for this year for 70 crores, but that's please remember that's only the material is issued free of cost from ISRO itself. It's only the value addition we're talking about here. And then moving forward, we would definitely see a lot more launches happening in terms of what ISRO can do. And we have very important critical launches moving forward, as well as Chairman of ISRO has mentioned earlier regarding Gaganyaan and other launches that we're talking about. So it will definitely help MTAR to expand the scope of business moving forward with ISRO. And also remember that we are because of privatization is what the government is looking at, and ISRO is giving a great support to us already for our SSLV design and development of the launch vehicle, which we have already started about 8 months back. So that's going to be another game changer for us in terms of developing that launch vehicle for the markets for various customers in the future.
Mr. Reddy, hi, good morning and congratulations from all of us for being part of this. Prashant this side. Just a quick word, sir. I mean, just actually a couple of questions, but not just limited to you. So, we have the... first, let me understand, out of the total cost of Chandrayaan, which is 600 plus odd crores, right? Which was stated by ISRO earlier. There is cost of course, parts, and then there is launch expenses, which also would be substantial. What is the total sort of involvement of the private sector, if you can kind of tell us in numbers? I mean, just an approximate number. How much work would have been contracted out of the private sector, out of the 600 crores?
As you have seen earlier, everything is 100% indigenized. There's nothing that...
No. I'm saying... Correct. To the private sector. Yeah, correct. So how much of it would be... So all of it would be private sector, the manufacturer?
All of it is backed up by the private sector from various companies like L&T, HAL, MTAR, Centrum. So different companies are involved in this at for different requirements. So it's completely manufactured within India by various private companies.
Okay. And between the cost of sort of manufacturing parts, equipment, etc., and launch expenses would, which is also substantial, that would be incurred by the government, is it? Or that also is...
The launch pad is obviously the launch expenses are incurred by the government. We're just talking about the hardware and the software.
And usually what is the split between both?
We won't have that idea at all. You know what exactly would be the split, which is not given to us, but that's something which ISRO needs to address.
Okay. So in April of this year, the cabinet had approved the space policy in which, they said that, well, ISRO will not be involved in, they'll conduct sort of development of technology, and etc. They said private sector will participate in a big way. Operational aspects will be taken care of by the Department of Space. Does that change anything in terms of how you've been working, and what is the thrust of that policy for the private sector really?
See, basically, ISRO was coordinating everything in terms of sourcing the various systems from different private companies earlier. So what government is looking at is for ISRO to focus more on the R&D, and obviously these two activities will go parallelly. I don't think there'll be any stoppage from ISRO launching or coordinating with various requirements that they need. But also there'll be a complete support to the private sector to manufacture the entire systems independently and then take it forward. So both activities would run parallel at least for the next 5 to 10 years. That's what I feel.
Okay. So can you help us with some numbers just to understand? I didn't get what the updated order book is that the company is sitting on currently, and what kind of execution timelines are we looking at? What all can you execute in the next 1 to 2 years, which may perhaps show through in your revenues?
I mentioned this earlier. We have an order book of, as of June 30th, of 100 crores and odd. We are looking at about 80% of the orders getting executed this year itself. So that's why we said we gave a guidance of 45 to 50%, 830 to 860 crores of revenue guidance moving forward.
830 to 860 crores would be in FY24, correct?
That's right.
Okay. So, and what is the guidance for FY25? What kind of growth, sustainable growth can you look at?
No, we are looking at probably 25 to 30% of revenue growth year on year. We have going to get many orders moving forward in the next 3 quarters, as I mentioned. We'll end up with an order book closing of about 1,500 crores by end of this year.
Okay, all right. Hi, Mr. Reddy. Good morning. I recall when you came out with an IPO, we had a chat and you said the potential is tremendous. And that's showing both in your financials as well as in the stock price. But give us a couple of more details. We got the top line growth. What about margins? They came in a little below the 25%, but you've maintained, you see it move closer to the high 20s. So do you maintain that guidance? Point number 1. And also the working capital days, you were guiding that things will improve. Is that the case as well?
Yeah, absolutely. I did mention that the margins moving forward will definitely improve, and we will come closer to what we have guided for, 28% plus minus 100 basis points. As I mentioned earlier, the second half of the year is much stronger than the first half. So our margins will definitely improve. I confirm the same guidance as of today. And working capital number of days, basically, we are working towards it on a consistent basis. And we're hoping to bring it down below 200 days by end of the year. And that's what this industry actually requires, that because we're dealing with a lot of long cycle and a combination of short cycle systems that we're working with various organizations within India.
Sure. Just one final question. This 25 to 30% revenue growth that you're looking at from here on, you've recently signed an MOU with InSpace as well, right? The Indian National Space Promotion and Authorization Center. Any revenue, any kind of monetization from that, any revenue potential, and have you added that into this, prognosis?
No, we have not added that. See, that's for the development of the small satellite launch vehicle, which we are working on, as I mentioned earlier, which would take about 4 years to develop the launch vehicle. So that's something which we are working with a lot of passion. A team of engineers are working on it. In most probably by end of this year, we're looking at testing our first of our engines. So we are progressing pretty well there. So that's something which you'll see the results probably in 4 years' time from now. So that's for the small satellite launch vehicle that we're working on, which I mentioned earlier.
Okay, all right, Mr. Reddy. Thanks so much for stopping by and giving us that outlook on your business as well as how the country is shaping up in this particular vertical. Wishing you all the best and congratulations on being part of this big mission.
Thank you very much.
Time to focus on a couple of large stocks then that are moving on the back of news. Nimesh joins us. First up, he's going to talk about Manappuram Finance. Well, Nimesh, you gave us a bit of a hint. It's likely to happen. The large trade took place. Party is, and how are you reading it?
Hi, Mangalam. So, huge block, 9.9% equity changing hands, right? And this was in the works for the last many days, was part of my charter list as well. So, in terms of seller, I understand the private equity investor, which is backed by Apex Partners, they were the seller in today's block. So, technically, it's a clean out trade from that large private equity. They were owning 9.9% stakes, so that sold out. In terms of buyers, I understand some domestic, some global, FIs were buyers, domestic AIFs were buyers, and some domestic mutual funds were also buyers in today's block deal. Could be a bit of a slippage as well, so that supply overhang can come in the next few days. So this is the color of the book in terms of buyers and sellers. Now, if you look at Manappuram Finance, it's been consolidating post Q1, but post quarter one, there were a few upgrades as well on Manappuram Finance from the likes of BofA Securities and CLSA. BofA had put out a note post Q1. They had raised the target price to 178, and they believe that at one time estimated price to book on FY25 earnings, it's still cheap compared to their 5-year average of close to 1.5. Even CLSA had put out a note, they had raised the target price to 175, and they believe that quarter one was quite strong with the subsidiaries too doing well, and the PPOP in quarter one was the highest in 8 quarters. So the sell-side analysts are quite bullish. The deal is done, clean out trade from a private equity investor, and in terms of buyers, there could be some large names which will get reported in the block deal data today.
Okay, thanks a lot for that, Nimesh. Well, Ekta is also here. She's talking about Ipca Labs and why you should be looking at that one. Ekta, over to you.
Thanks for that. Well, definitely positive news which is coming for Ipca Labs this morning. The US FDA has classified their Piparia facility as voluntary action indicated status. So voluntary action indicated status basically means that they've got the thumbs up from the US FDA to continue manufacturing from this plant to supply to the US. Now, why is this important is because the Piparia facility has been under import alert along with 2 other facilities of Ipca Labs since 2015. It was re-inspected in April 2023 and at that point in time issued 3 observations. So that means that with a VAI classification, the likelihood of an import alert being lifted for that particular facility increases, and hence that's the reason why you're seeing the stock higher by around 3.7%. There are other plant inspection outcomes which we are waiting. For example, their Ratlam facility, which is an API plant, was inspected in June and was issued 11 observations. That plant too has an import alert.
All right, Ekta, thanks very much for that. Let's put up GMR Infrastructure. That's the one I want to quickly highlight. It's up 6.5%. Very sharp spike coming through on GMR. The stock's at about 63 now as we speak. And Yatharth, which is the recent hospital listing, Yatharth is up another 4.5%. Yesterday was a very strong day. Day before yesterday was a strong day for these smaller hospital chains. So that continues. And MapMy India it started 2% higher, is up full 5%, 5.5% on pretty strong volumes for this point in the day. We're up 140 points on the Nifty, but I think we have our next management ready with us. Nigel.
All right, well, let's move on then. Let's talk about Tega Industries. Well, the stock post-listing has done very, very well. But in the last few days from the recent high, it's come off a little bit. The first quarter was rather weak, but what's the way on from here? Well, we have Mr. Mehul Mohanka, the managing director as well as the chief executive officer at the company, joins us on the show. Hi, Mehul. Thanks so much for joining. Good to see you after a while. Well, let's focus on a couple of aspects. You've done some inorganic growth on that McNally acquisition, 165 crores, 100 crores of debt, I think 65 crores of equity. How do you see that asset shaping up? What revenues did it do in the past year? And what kind of growth and margin trajectory do you have only on this asset?
Sure. On McNally, as you know, we got the NCLT order approval in end February of 2023. And since then, we've been quite busy and occupied in integrating the asset and realizing the value that is to come through the acquisition. So in the full year, last year of FY 22-23, McNally Sayaji did 185 crores in top line. And we are estimating a 15% growth over FY 24 from where it ended last year.
And what about the margin trajectory on this asset itself? It's a little bit lower in comparison to what you're already doing. But if you could tell us more.
Yeah. So on the margin side, on EBITDA, operating EBITDA, McNally is at about, they did last year about 8%. We look at with a healthy mix of increase in order book margins, as well as on the spares business to push it up to close to 11 to 12% in FY24 in terms of margins.
Okay, 11 to 12% in FY24 in terms of margins. Got that. Mehul, hi, good morning. Overall, the numbers have been weak in the quarter gone by. And you have mentioned that there was port congestion challenges, there was unavailability of containers, which sort of restricted your earnings as well. Is that something that will continue in Q2 and Q3 as well? And what is the outlook for the full year in terms of top line growth?
So typically, as we've always said, Q1 tends to be soft for us, and then it picks up from Q2 onwards, and then Q3, Q4 tends to be the big quarters for us. So if you look at end of Q1, we are sitting at an order book of about close to 365 crores in Tega and about 150 crores in McNally Sayaji. So with the order book looking as healthy as it is, we feel that the guidance of about 15% growth in FY24 in both the businesses will remain strong.
Okay, all right. So last year you did around 1,214 crores. Of 15% growth out there would be close to around 1,400 crores in that vicinity. And on top of that, X of it as well, you'll have McNally's 200 crores. So in all, you'll do around 1,600 crores. Is that correct?
Yeah, if you do the math, yes.
All right, so 1,600 crores. And what about the margin trajectory as well? I think you've been guiding for around 21 to 22% approximately. Now, McNally will grow, but as you mentioned, margins are relatively lower. So,
yes, so the margin mix is separate.
Yeah, go ahead.
So the margin mix is different between the consumables business and the equipment business. So as in the consumables business, of course, we hold the margins of about 21 to 22%. And in the equipment business, it'll be closer to about 12%, as I mentioned.
And equipment business as a percentage of the total mix is how much McNally adds to it, but as it is, you would have some part of your business in the equipment.
So McNally is the equipment. McNally is the entire equipment business.
That's
for
it.
us. Yes.
Okay. So on a blended basis, still 21% is doable? Blended both together?
Yes. No.
Oh.
So just on the Tega piece is about 21 to 22%.
Got it.
And the McNally piece will be about closer to 12%.
Okay. McNally is 12% and Tega is 21 to 22% on margins. Got that. You have some expansion plans in Chile as well. Can you tell us a little bit about that? What is the quantum? How much are you expanding and by when?
Yeah, so we're just awaiting, local regulatory approvals for starting construction. So the land acquisition, everything has been done. We're hoping that by Q3 of FY24, we should commence construction. And if that be the case, then FY25 first quarter, we should go into commercial production. So
once you go into commercial production, then what is the kind of revenues that you would expect from that expansion?
So it's a greenfield project where bulk of the capex is more into infrastructure, not as much on capacity expansion. So, but with the capacity that we're putting in, incremental revenue will be about closer to $30 million on a year-on-year basis.
Okay, all right. Mehul, the street was very excited about Dynaprime. How is that doing? How much did it contribute to the total revenues in the last year? And in this year, how much will it contribute as well?
So Dynaprime is growing quite healthily for us. I mean, last year it grew about close to 28%. We're looking at a healthier uptake in this year as well. We recently announced a large order that we got from a customer, which includes Dynaprime sales to them. It's a 5-year contract, extendable by another 2 years, and that's going to bring in another significant impetus to the entire Dynaprime story that we've been saying right from the start.
What is the contribution? You used to, I think, around 30% of your revenues. Is that correct?
So the mill business is about 70% of our revenues. The non-mill business is 30% of the consumables business, and Dynaprime continues to be about 30 of the 70.
So 30%.
Okay, all right. Mehul, thanks a lot for joining in. Appreciate your thoughts here. That's Tega Industries with their business, their expansion plans and the way forward. Let's take a quick break on the other side. Okay, before that, Mitesh Shakkar is with us. So we'll just get a quick run through on what's happening in the market. By the way, the market is soaring now. So Mitesh, good day to trade on the long side. The Nifty is now up almost 130 points. But do you see the market build on to its gains from here? And what is the strategy for the rest of the day?
Morning again, Sonia. I think it will, but today I would be taking some profit out. Yesterday we talked about the buy signal on Bank Nifty, which we got on the hourly charts. Today we have seen a good follow through around this 45,000 spot level, and we have had a high of 44,949, and we're trading around 44,920. Around 45,000, 45,050, there is an intraday cluster which was formed sometime in the first week of August. So I'll be inclined to take some profits over here. So eventually, I think the Bank Nifty will head towards 45,400, 45,500 zones. But I think some profit booking should be advisable over here because that's where we are approaching as a important pivot cluster. Similarly, on the Nifty, I've talked about 19,650, 700 as this resistance area. So closer to that, as we get closer to 19,600, I would take some profits off the long position and then wait for a dip to buy into it. But yeah, the broad direction remains on the upside. On stock side, I have a buy on Godrej Properties, which has given a gap breakout today. So buy here with a stop at 1610 for targets of around 1675. And the other one which I like is Tata Elxsi, which I would recommend buying with a stop below 7200 for targets of 7350.
Okay, the Tata Elxsi. By the way, Mitesh, did you in the morning put out a call on Sun TV? Sun TV was one of your calls earlier. That it's breaking out.
Disclaimer here, Prashant, I bought it yesterday in my portfolio. I think there's some long-term movement happening over here, and the monthly charts have become very interesting. Sun TV for me, I think getting past this 550, 560 zone is some kind of a long-term breakout. I suspect a potential target of around 700 over here. So very positive, and disclaimer, as I said, I hold the stock in my portfolio.
Got it. Well, thanks very much. We'll keep an eye. 120 points on the Nifty for now. We'll take a quick commercial break here. We are back with what's happening in the commodity space. Manisha will be with us for that in just a bit.
Welcome back to Bazaar Corporate Radar. The markets are looking pretty fab actually at the moment. The Nifty is now up 115 odd points. But let's get a quick handle on what's happening in the world of commodities. Manisha Gupta is with us. Manisha, what's the one commodity that you're looking at today?
Well, I'm looking at crude oil prices and some support for the rupee, or perhaps the markets could be coming in from that too, because we're trading at a 3-week close onto this one, and today is a 4th straight day of decline coming in for the crude oil prices. We are moving back away from the $80 barrel plus kind of levels that we saw in case of the WTI. Brent, remember, has seen a high of $87.50 in the month of August itself. We are not able to hold 83 in the Asian markets right now. So constant decline, one-way decline is what we have seen in case of crude prices. Remember, every data that has come in from China for the month of July refers to a slowdown into that country. Also, the US could continue with the restrictive policies, what really seems to be bothering the bulls there. If you look at the inventories in US, that also seem to be increasing. The US inventories for crude have seen, while a decline of 6 million barrels there, the buildup in gas and distillate inventories is what tells you that on-ground demand is not improving as much. And then take a look at the production numbers as well. The US production at around 12.8 million barrels per day is a 3-year highs. The highest ever has been 13.1. So we are not too far away from those levels. And then the weak PMI numbers from US and Eurozone are bothering. There also are talks of resuming of nearly 450,000 barrels per day from the Iraq-Turkey pipeline. Iran also says that they're estimating to increase to 3.4 million barrels per day by the end of September. And then there's a draft policy on where US could allow Venezuela to start exporting more oil as well. So every news story that you look at, there is more oil coming in sense of supplies in the global markets, and that's weighing onto the street there. If you look at the prices itself, we are down by 2% on the week. And for the month of August as well, we have turned negative now for the crude prices.
Right. Manisha, thank you very much for that. Interesting as always. We'll keep an eye. We'll take a quick commercial break here. On the other side, our special segment, Indianomics. Lata will be joined by a host of experts to discuss the government's move of restricting laptops and PC imports and the subsequent impact on Indian manufacturers. So interesting panel joining in. Stay tuned.